and gentlemen, welcome to day 25 of the How to Make Money Online 30-Day Challenge. Today's topic is stock trading. I hope you guys are ready because I'm super excited about this one. Stock trading is super interesting. It's definitely something I think that can be intimidating for a lot of people, but there are definitely ways and approaches and strategies that you can do to make it a lot less intimidating and something that's really beginner friendly. So before we dive into all that, let's get started real quick here. We're gonna do like we always do the overview, the definition, and then we'll kind of get into our outline with stock trading. Okay, so stock trading involves buying and selling shares of publicly traded companies with the aim of making a profit. So traders use various strategies in order to capitalize on market fluctuations. So leveraging tools, um, analysis to make really informed decisions. Stock trading can be done through different methods such as day trading, swing trading, and long-term investing, which I personally like, and each requiring a different approach and a different level of risk. So we were definitely going to cover all of that and a lot more. So, okay, so let's start with getting started with stock trading. So we talked about the definition of stock trading. What is the importance and the growth of the stock market? So the smart stock market is a great way. It's a great way to start investing your money, and you can do it in little tiny pieces, so little spurts here and there. So you don't have to have a ton of money to get started investing in the stock market. So, and then the earning potential of the stock market is crazy. Hey, Sweetums, how you doing? Thank you so much for joining. Yeah, definitely did early today. Got a couple things going on tonight, so I had to hop in early today. But thank you so much for joining. I really appreciate it. So we were just covering the basics of stock trading here, stock trading, going over going over everything, the definition and all that kind of thing. So all right, let me just look at my notes real quick. Okay, so we talked about the definition. So understanding stock trading. So we're going to talk about the key concepts here. So what is a stock? So basically, a stock is a form. You can think of it as like buying a piece of a company. So buying a sliver, like almost, like think of it as like buying a piece of pizza. So you're buying, the whole pizza would be the company, and you're buying a sliver. So you're buying into the stock itself, or buying into the company itself. Sorry. So there's a bunch of different types of stock trading, but we're gonna just cover, a couple of basics that I think are pretty common with stock trading these days. So we're gonna get into that here in one moment. Let me just grab my water real quick. Okay, so the types of stock trading we're going to talk about is number one is day trading, number two is swing trading, and number three is long term investing. And we'll kind of get into those a little bit later, what those mean. We'll just go through the outline first, and then we'll go through those. So, um, and then we'll talk about the benefits and the challenges of actually understanding stock trading. So, and of course, getting started as a beginner. So, we'll go through all of those steps, what the process is in order to actually be successful at stock trading. And there's a ton of different strategies that you can approach this with. So, it's really a matter of, how do you actually want to jump into doing stock trading? So, there's so many different ways. So, let's get started and we'll talk about day trading first. So, day trading basically means you're going to trade a stock, buy or sell a stock on that day, on that specific day. So you're gonna go in and whatever it is, you don't mess with the numbers or anything. You're gonna buy it for what it is. So buy the stock for face value, whatever it is, the market price. Swing trading is talking about that's another thing. So you kind of hold on and you watch the fluctuations and you watch the motion of actual trading. So you hold on to it for a couple days to see if the stock itself is going to swing in either direction. So either like a high direction, like either it's going to raise and you could potentially make some money, or it's going to drop and you could potentially lose some money. So that's where the strategy comes in. You got to figure out, where can I actually, do I want to sell, as far as, making sure it doesn't go too low. So that's swing trading. And then of course, long-term investing is going to be buying a stock and holding it for the long term. So what that basically means is you just buy it and you're going to sit on it, and it doesn't matter if it goes up and down, up and down. You're just in it for the long haul, and it's just going to gain and gain. Um, you know, it's going to gain in price, or it could drop, but you're holding on to it for the long-term investment. So it doesn't matter how long, you're just holding on to it and hoping to just kind of watch it, make money as the days, weeks, months, years possibly go by. So okay, so let's jump into the benefits and the challenges. So, some of the benefits for stock trading, or stock investing, otherwise known as, um, is, hey Rajat, how you doing? Hey, so what do I think about SIP? So, just correct me if I'm wrong. Is that's systematic investment plan, right? In terms of, it's basically like an investment strategy where an investor invests a fixed amount of money at regular intervals in the stock market. I think that's actually a great plan. That's a great idea. And it really is going to depend on how much money do you have to actually your, put towards your investing strategy. So whether you set aside money, I think every month. Um, hey, Mallet FX, how you doing? What do you think about tap to earn airdrops on Telegram? You know what? I'm not too familiar with that. Um, I know what Telegram is, but I'm not sure what is tap to earn airdrops. I'm not too sure about that. Okay, so let's continue on. So, some of the benefits for stock trading is definitely going to be the potential for high returns. And you want to make sure that, if you buy in, or whatever level you buy in at, um, you want to watch it. So there's a potential for the stock to just jump up, and there's many, many different ways that this can happen within the market itself, in terms of like the fluctuations. So this is something that I think is a big lure for a lot of people. So you know what? I haven't heard of that. Is that crypto? Like a crypto, like not coin? So the next thing is liquidity. So basically, like having money that you have that can be tied up into the stock market. So that's definitely, you're getting liquid money. Basically, as a stock grows, if you're getting dividends out of it, you're just getting money, and you have the potential to reinvest the stocks every month. So, or not necessarily every month, but it would reinvest um, every so often. So, and then of course market participation. So we're going to talk about different ways you can participate actually in the market, and it doesn't have to be scary. It can be something that is fairly easy to understand, and you just kind of go in with a very, very simple strategy, and that's how you can get started. So okay, I'm gonna check it out. Let's see. Okay. Yeah, Mallet, I'll definitely look it up for sure. So today we're just going to kind of focus on like traditional stocks, and stocks, bonds, ETFs, that kind of thing. We actually had a video previously on crypto, so well, if we got some time at the end, we'll kind of touch on crypto, but we're just going to kind of focus on the traditional market right now. So, but definitely, thank you so much for letting me know. I really appreciate that. That's good to be able to absolutely gain knowledge. So for sure, thank you. Okay, so we're gonna talk about when we try to when So when you think about getting started, like as a beginner, you definitely want to for sure educate yourself. So learning the basics of the stock market and getting into trading, that's definitely something that is something I think is everybody should get into. At least be familiar with it and be aware of what the stock market has to offer. What does it mean? You know, it doesn't mean you have to go really deep in and you have to understand every single part of it, but at least understanding part of the stock market to where you can actually make conscious decisions, you know, smart decisions with the money that you actually, you know, put into the stock market. So you want to understand different trading styles and strategies and certain things like, you know, are the stocks that you buy into, do they pay out a dividend, which is basically like, you know, if you pay into a you buy a stock and a company's doing really well, then a price of that, a little fraction of that, the profit that the company makes gets paid back to you, and that's called a dividend. So there's a whole strategy just based on dividend stocks. People just buying dividend stocks, meaning every time that it pays out, and usually it pays out. It really depends. Usually, I think it's around once a quarter. Let me just see because I let's see. Okay, yeah. So it's about quarterly, but it could be issued annually or monthly, depending on the company itself. So that's another thing that is good to look into and be able to understand. Okay, is this something that you know I want to just do dividend investing, to where you buy into a stock, you know that it pays a dividend, and then you take that dividend and you enact what's called a DRIP. So basically, dividend reinvestment program. Depending on what the platform that you use is, I know Robinhood has this feature available in terms of reinvesting the stock itself. So like reinvesting the dividend back into the stock. So basically, what you would do is you would buy more stock, and it would automatically buy stock for each dividend that you get. So it's basically like on autopilot. So you wouldn't actually need to go and manually buy more stock with that little dividend, the little money that you get from the company. You would just reinvest it. So it would be reinvested automatically. So a great way that you can definitely get started as far as educating yourself is, you know, of course, read books. Just generally speaking, as far as getting like some high level knowledge on the stock market, taking online courses. You can follow reputable financial news sources. One good show on I think it's CNBC or MSNBC I think is Jim Cramer, and he has this show called Mad. I think it's called Mad Money or Money Matters, one of those two. And he basically goes over like explains what's going on in the market and breaks it down real easy to where you're able to understand, you know, what's hot, what's trending. He definitely covered the really big GameStop, you know, kind of that whole thing when that happened a couple of years ago. He was really big on that, and he actually, you know, he made some interesting comments about that one about how he couldn't believe that GameStop was just blowing up. And I think at the time it started out, it was like between like maybe $10 to $25 a share, that kind of thing. And I know it skyrocketed very, very high. So I can't remember exactly how high it went, but I know it definitely went high and it made a lot of people millionaires. So that was one of those things that is just such a blue moon situation that happens. It just kind of happened seemingly like out of nowhere. I mean, and it all started on Reddit. So that's definitely something that's interesting that could happen, but um, that's definitely not the norm in terms of like traditional investing. When you think about just investing, you know, in a safe manner, that kind of thing. So when you're looking to start getting involved in trading and getting involved in investing, you definitely want to choose a platform. And there's a million and one platforms that you can choose. So one of the easiest ones that came out in the last couple of years is one called Robinhood. And I think it gained so much popularity because the company themselves, they really wanted, their whole goal was to really introduce new investors, introduce people that had no idea about anything with trading or investing, and basically get them on and start investing in stocks. And it's very easy to use. I mean, you just click around a couple times and you're able to buy or sell any stock that you like. I mean, obviously you'd have to have money to buy it, but you could buy anything fairly easy. The layout, the user layout is very, very simple, very easy to navigate, and it's just I think it's an excellent beginner friendly type platform. Um, for the basic buying and selling, there is no fees. That was the kind of thing that they really kind of, prided themselves on, was that there's no fees. And so I'm pretty sure that they still don't have fees for like the typical, as far as like buying and selling, like the traditional sense. Any more advanced strategies, there may be fees, but let's see. I'm just gonna check real quick. Does Robinhood have fees? Okay. So it says Robinhood doesn't charge fees or maintain a standard account to deposit money. Robinhood does pass on some of the regulatory fees to its users, such as the TAF, the trading activity fee, and the regulatory transaction fee. These fees are mandatory and charged by regulatory bodies like FNIRA and SEC. So it's something that's like so minuscule that you wouldn't even know. Um, so they basically say this is their stance, Robinhood's stance. We don't charge you fees to open or maintain an account. So that that's why I think a lot of people were drawn to Robinhood. And it was just one of those things where um, I don't know. I think people got into it and they were able to kind of like learn, and they have all these different trainings and stuff on there. And I think it was a win-win for everybody, and people that are still there that are involved with Robinhood. Like I still have an active account on Robinhood, and it's easy to use. It's simple, and they make it very simple, especially with some basic basic strategies in order to invest. So I'm just curious. Do you guys, anybody here on the live stream and the live chat, anybody have Robinhood? Do you guys use Robinhood? Anybody? Yeah, so I think definitely like one of the benefits of many is the ability to buy fractional shares. So has anybody heard about that before? Fractional shares. I know that's kind of it's a term that was used by Robinhood. I mean, I know it's not like their term, but basically what it means is you're able to buy slivers of shares without having to buy the full thing. So let's just say, for example, that a share, or let's get the real number. So let's see. Okay, so one share of Apple right now is $226. So you would be able to buy in at a fraction of the cost and basically own a fraction of the share. So however much that you could afford to buy in, you're not buying the full share, but you can buy in a sliver or a fraction of the share through Robinhood. So let's just say you had maybe 20 bucks. So you would, whatever that is, what is that like? I don't know, a tenth, maybe a tenth of the price of the share. So you would own a tenth of the price of the share. So meaning when the stock went up and the stock did well and Apple made money, you would still make money, but obviously you wouldn't make it to the extent that somebody who owned the full share as a whole. You wouldn't make as much money as they would, but you're still making money. So that allows you to buy in and still participate in the stock market, even though you don't have the one full share, like the share as a whole, that kind of thing. So I think it's really like important that it allows people that aren't familiar with, stock trading or getting involved in investing, even people that are just super brand new or just trying to play in a little bit and trying to learn. I think it's an excellent way for people to get in, to get involved, and to be able to actually invest. And I think that's super cool because it's introducing people to investing without having to just drop, their life savings or drop money that they actually don't have. So, um, anybody out there, you guys out there, anybody out there use Robinhood, or any other platform that you guys want to share, like whichever one you use? I'm just curious. So, in trading, when we're talking about trading a platform or choosing a trading platform, really it's all about, I would check, how easy is it to use? So ease of use, definitely. Check the fees and see if there's any fees that they might have that they might charge you for buying or selling or that kind of thing. You definitely want to compare the fees and the features, and maybe above all that, you want to look at the user reviews. You can usually look at something like Trustpilot or some other software like online review platform that you can tell and see, okay, what are the people's experiences with Robinhood or whatever the platform is. Robinhood, there's E-Trade, there's Fidelity, there's Schwab, there's all kinds. I mean, there's Webull, there's what's another one? Um, Coinbase is for crypto, but there's a ton. There's a ton out there. So really, it's a matter of what you like, what your preference is in terms of actually choosing the layout. How easy is it to use? Um, can you get accepted as far as with Robinhood? I think they just you type in all your information when you want to apply, and then I think you need to upload a screenshot or a picture of your driver's license or some sort of form of government ID. So I think I just did like front and back of my license, and then you submit that, and then it takes a couple days, and they'll do like their background check and just confirm you are who you say you are, and then that's when they'll approve you. So once you're approved, then you can start setting up all of your bank account information, and that way, that's probably the best way. So if you set it up through the bank, everything is going to be direct deposit. As far as if you were to make money and then you wanted to withdraw money and withdraw it into your bank account, that's probably the quickest way, is doing it actually through a bank. So setting up a checking or savings, that kind of thing, within the actual platform itself. So okay, so next up is going to be opening a brokerage account. So what you want to do is obviously go through the steps. You want to complete the registration process, and just remember that it's not going to be exactly the same for every broker, every app, that kind of thing. So you really want to kind of just choose one. If you're not sure, that's why I recommend Robinhood, just because I feel like that's a really easy beginner friendly one. Uh, Granted, there's some things, there were some limitations a couple years ago, but I think in terms of what you're able to do, your ability to actually invest and do these, I think, more advanced strategies, I think a lot of that is probably open now, but before it wasn't. So, and that might have been during kind of like the time a couple years ago of what we're dealing with. But so once you complete the registration with whoever your broker is, then you're going to fund your account with an initial deposit. And I think it's probably something like maybe like 20, 25 bucks, something like that. So nothing very nothing that's going to break the bank. It's pretty standard as far as having a general amount in order to, fund your account. And I know for sure with Robinhood, like you don't need any kind of minimum account balance. So basically you don't have to have like a certain amount of money in your account at all times. Um, and that's good because if you drop, let's just say you drop $100 and you want to actually, or you deposit $100 and you want to buy this stock and a fraction of this, and you want to buy this ETF, um, then if you don't have any money left, or if you have like a dollar or like 50 cents left, you don't have to worry about them closing down your account, which is awesome. So there's no minimums. You can literally have a penny in there and everything's fine. I'm pretty sure you can have zero as long as you have some sort of activity that's going on, that you've once you open the account, that you have some sort of stocks, bonds, ETFs. You can even buy crypto inside Robinhood. So yeah, so that's why I like it, because it's super easy to use, super simple. And that kind of takes us into developing a trading plan. So basically, what the best strategy, in my opinion, is, you want to set clear financial goals. So what do you have in terms of what are you looking to do with investing? So for example, do you want to literally just buy all of your favorite stocks? So let's say you're a fan of Apple, the company, you're a fan of Coke, you're a fan of, let's say, Microsoft, you like Logitech. I'm just looking around to see, any other companies that you like. Maybe you like, I don't know. Anyway, Target. So you take all the companies that you really like and you take a look at what their stock is, and maybe that's your plan. Maybe that's your plan is to buy into the companies that you support, or the companies or the brands that you support, you like, you use, you love. Um, there's nothing wrong with that strategy in any way, shape, or form. I mean, that is something that I would consider a very, very simplified, very basic strategy in terms of investing. Just invest in what you like, right? So, I mean, um, another part of that to go up a step would be, okay, so I'm going to invest in what I like, but at the same time, um, if you're like, okay, well, I really want to buy a ton of stocks or a bunch of different stocks, but I don't have the money to buy the full stock of everything. So what you can do is you can buy into something that's called an ETF. So ETF stands for Exchange Traded Fund. So basically what that is think about it as like if you're making a pot of stew or soup or gumbo and you have all the different ingredients that you're pouring in the pot and you're super excited for like the end result because it's going to taste awesome. And every ingredient that you put in this pot of gumbo is going to be a different company or a different stock. So basically, an ETF, think of it as like the pot of gumbo. So inside an ETF is a bunch of different stocks that are a part of that basically gumbo. So that's a good way to think of an ETF. So you can buy an ETF share that houses a bunch of stocks in it, and then that's a way that you can get around not having to buy individual stocks themselves. Um, or what you can do is you can buy fractional shares of whatever stock that you like or that you're really happy with, or not happy with, but that you're a fan of or that you support, and then you can buy into ETF. So have you guys, anybody out there, have you guys ever bought into ETFs before? Um, let's see. I want to see. I'm just curious. So one of the most popular ETFs. I mean, I personally bought into this. So um, awesome. Hey DP, how you doing? Thank you so much for popping in and offering a comment here. Sweet. So you've done well with water ETF. Awesome. What category is that? Is that like the ETFs, they basically come in, different categories as far as like there's some tech ETFs and there's some general ones. One of my favorite ones is Vanguard. So Vanguard S&P 500 ETF, so it's VOO. So I'm gonna post this in here. This one is, I think, one of the most popular. I say popular. I mean one of the most well-known ETFs that you can buy as far as like buying in and just having a nice range of different brands within that one. Um, so another one that I have that I really like that has a nice return is this one. So it's the S&P 500 for the SPDR, that one. Hey Sash, yeah, no problem. So an ETF is an exchange traded fund. So what that basically means is, let me get you I'll get the definition and I'll send it to you. So, okay. So I'm going to post this here in the chat for you guys. So, all right. So I put it in the chat. So basically an ETF is what it is basically, it's a combination or like, think of it like a pot of, I was just explaining like a pot of like gumbo or soup. And you put all these different ingredients in there and all those different ingredients are different companies. So it's one fund that houses a bunch of different stocks within it. So instead of having to buy like a bunch of different stocks individually, you can buy this one stock, which is basically called an ETF. So, oh yeah, DP, you do PHO. Right on. Let's see. I'm not familiar with that one. Let me see. Oh, okay. So Invesco Water Resources ETF. Okay. Right on. No, that's cool. How's that been doing for you? So it looks like it's at $64, about 12 cents, and it's up about 6 cents today. That's cool. That's super cool. Yeah, I usually stick to the ones that um I don't know. I'm kind of like not super adventurous when it comes to like, ETFs. I mean, really I was just kind of like diving in like initially and kind of just checking like what were the more popular ones. But yeah, I think once I have a little bit more, I guess, kind of liquid cash that I can actually use to invest. Um, wow, that is awesome. 42% over 5 years. Holy moly. That's great. That is awesome. Congratulations on that. That's a great one. I'm definitely going to be writing that one down. So, do you have a specific DP? Do you have a specific like investment strategy that you wouldn't mind sharing? Like just like high level, like what do you prefer to do as far as, your investment strategies? Just to kind of like share with the others, I know it'd be helpful to have other people, kind of share their strategy, just especially for the people that A don't know what they're doing and B it's just kind of nice to have somebody else talk about it. And all right, so while we're waiting on DP, so oh, okay, cool. Watching documentary got me on water. That's pretty cool. I mean, isn't that interesting how that happens? It just something that's like seemingly like, potentially unrelated. I mean, can just draw you in and yeah. Okay, cool. No, that's awesome. That's good. And that's not that difficult, right? I mean, for somebody who's never done this before to go in there and just try that. So, hey, Village, how you doing? Welcome in. So right now, you guys, we're doing a how to make money online 30-day challenge. So today is day 25, where we go live for 30 days straight. And today's topic is stock trading. So we'd love to have you guys be a part of this. If you want to hang out and go on this fun ride with us, all you got to do is subscribe to the channel and come along and hang out with us. So okay, so then this is the part that I think it scares a lot of people. So define your risk tolerance and your trading style. So if you're brand new and you're like, well, I don't even know what a trading style means. I don't know what it is. That's okay. I mean, that's something I think you kind of learn as you go along. So, hey, Farouk, how you doing? Thank you so much for joining. That's something you kind of learn as you go along. So your trading style, I think, it can be adaptable and it can change with, you know, maybe how much money you have or maybe, that kind of thing. So, in terms of, just in general, it can, I think, kind of fluctuate, with how you start versus, where you end up in terms of that. So, um, hey, Farouk, we're going to try to stay on topic, okay, with the stock. So defining a risk tolerance is definitely something where basically what that means is how much are you willing to risk as far as when you put in your money? How much are you willing to lose? Are you willing to risk losing? That kind of thing. So, and your style could be something that starts out very simple, very basic, and it could basically organically kind of morph into something that you didn't intend on or you didn't start with. So, I definitely think also it's important to establish rules for entry and exit points as far as, okay, this is how much I'm going to start with as far as putting money in. And then I'm not going to let the stock go below this price as far as my exit point. So, hey, Fact, how you doing? Thank you so much for popping in. Really appreciate it. We're talking about stock trading today as part of the 30-day challenge, how to make money online. So, another thing you can really do is you can start with a practice account. So, which is really cool. So it's basically like paper trading. So if you haven't heard about that, um, paper trading, you can actually go in and you can do all of this stock market and you can do it without having to use real money. So, have you guys tried that before? Anybody tried paper trading before? So you basically are doing everything that you would do with your own money, but it's basically automated. So it's basically like using monopoly money. So hey, let's try to stay on topic. effect. Yeah, we're just talking about stocks, so um, we'll just try to stay, stay with the subject. So what you can do when we're talking about setting up with a practice account, so you're not using your own money, you can use a demo account to practice the trading, and it's also called demo account is also called paper trading, without risking your real money. So what that means is that allows you to learn strategies to figure out exactly how it works in terms of being able to, kind of watch the market, watch the trends, see how they're going up and down, how they're moving, and basically you gain confidence, and you're allowed to, it allows you to test your strategies, to maybe form different strategies maybe you wouldn't be as brave or courageous enough to try if you were using your own money. So how does that make sense? Just want to make sure that we're on the same page here. So the next thing we're going to do is we're going to talk about, you got to do like a market analysis. So you really want to learn the technical ways to analyze the data. So the charts, maybe look at the indicators, maybe even look at patterns. Whether something is trending up, trending down, maybe certain times of the day. But it could also directly correlate to what's going on in the news. It could be the economy. It could be certain companies that are making moves in certain ways that maybe have a cause the market to fluctuate a little bit. Um, so that's all something that I think as you kind of go along, you get more experience. It's just going to help you in the long run, as far as being a little more confident and with what you actually choose to do as far as in the market. So, and also along with learning the technical skills or the technical analysis is understanding the fundamental analysis, like the bottom line. So understanding what does it mean for like company financials and industry trends. So what does that actually mean? Going in and diving in and understanding kind of like the full scope, like the full picture. And then of course using economic indicators and the news, like we just talked about, to inform your decisions, to basically make the best decision you possibly can. So I know DP was mentioning about that earlier. Basically, using the news to kind of guide, what they do as far as, what kind of moves they make in the stock market. So I think that's incredibly smart. Um, and it really depends on, I think honestly it's a gamble. I mean, there's nothing that's a sure thing, but I think it at least helps to kind of guide your strategy a little bit in terms of, okay, what are we dealing with here as far as, is something going to go up, down, that kind of thing. So hey Mallet, no, that's a good question. So the question is there a mental exercise to discipline oneself in risk management? Because as a new trader, a lot of people tend to be, yeah, you're right, they do tend to be reckless for sure. For me, I know what you can do is, within Robinhood specifically, because that's kind of the main brokerage I use is Robinhood. You can set limits, so you can set daily limits in your settings, and then what that would do would be, okay, not only daily limits with how much you can spend, but also how much you can withdraw from your bank account. So that may be a good place to start. You just have to make sure that you have strong enough willpower to not raise those limits. So I would say for sure, um, just remember. I mean, go in knowing that whatever you deposit, it's easy to just pull money out, right? Like basically like gambling. You pull money out, and are you able to, like, if you lost everything that you pulled out, would you be okay? Can you pay your bills? Can you pay for, things that you need for your necessities in your life? So I think that would probably be a great, it's not necessarily like a mental exercise, but I think it is definitely a great strategy in your settings, like the back end settings of your brokerage account, your brokerage app on your phone, or on the web version, is definitely setting limits. So daily limits about how much you can withdraw, in addition to daily limits with how much you can actually spend. So that might be a good place to start. Um, at the end of the day, you got to be accountable for yourself, right? In terms of, okay, another thing maybe you could do is maybe potentially you open up a separate bank account. Um, just like a separate checking account, some wherever you want to open it up, or whatever bank or whatever, and then you fund that bank account, and that's the one that you link to your brokerage. So when the money's gone, you're not using like all of your money or your main source of money. So in terms of, maybe as far as like the money that kind of funnels in from if you have a job or some whatever source of income you have, um, you can funnel the money into this separate, like completely separate account, and that might be a good way to, if you were to drain that account, you wouldn't be losing everything basically. So that's probably kind of the way that I would look at it, the strategy I would kind of approach it at, because I do think that it takes a lot of willpower. You have to be strong, and you have to, like you said, Mallet. I mean, you got to be disciplined for sure, because it is so easy to just pull out like, hey, I'm gonna take a grand. If you have a grand, I'm gonna take it out and just throw it towards whatever stock, and that's so incredibly dangerous. Not just because you're just throwing the money and you don't know what it's gonna do, right? You don't know if the market's gonna go up, down, um, or even if you have enough you know, to fully buy whatever you're trying to buy. So that's where you kind of have to discipline yourself and say, okay, what about fractional shares? So I might get a fractional share of this. I'm going to put 20 bucks here, 20 bucks here, 20 bucks here, that kind of thing. So that might be another way to kind of look at it and approach it. But definitely safeguarding your money for sure. That's what I would do to make sure that I wasn't like completely reckless with my money, and I knew that if I drained that extra bank account that was just meant for investing, then it's not messing with my total funds. Hey, how it happens? How you doing? Um, who have you tried before that you've gotten scammed on? I'm just really curious. So, and another question is, are you by chance in the U.S. in the United States? The one that I talk about the most, that I really like, is Robinhood. And yeah, I'm just curious, like, how are you how are you getting scammed? Like, what is actually happening to where you're getting scammed? Okay, so we'll move on while we're waiting for that. So we're going to talk about making your first trade. So you really definitely want to start small, like we kind of mentioned. Start small and gradually increase your investment. So what does that mean, starting small? So if you start small, let's just say 10 bucks. How can you buy anything with $10, right? I mean, that's kind of like the initial thought. So we can go back to what we talked about before with buying fractional shares of a stock. So basically, you would buy like just a sliver. So you'd buy the sliver. Um, let's see. Hey DP, you know what? I don't think that Robinhood has. I don't think they do. I don't think they have paper trading. Um, nope, it says they don't offer paper trading. Who? I'm trying to think. I think it was Webull. I think Webull paper trading. I think. Yeah. Okay. So are you DP? Are you familiar with Webull? Webull. They definitely have a stock paper trading simulator. So just go to webull.com, and here, let me copy this. Actually, I'll put it in the live chat just so, because I know sometimes it's hard to understand what I'm saying. So Webull stock paper trading simulator. Okay, cool. Sweet. Yeah, definitely. So you can just Google it, Google that, and then that way you can check it out. And that one's free to just sign up. I mean, obviously you don't have to put any money because you're not using real money. So that one's super helpful as far as being able to learn and really dig in and really grind and get the feelers out there and really learn as much as you possibly can. So um, well, I'm sorry that happened to you. How it happens. I wouldn't go with anybody um, like anybody that's not like a major brokerage, right? Like a Fidelity, like a Robinhood, like a Schwab, like who I mean, there's a ton of them out there. E Trade. I mean, don't go with anybody that isn't like FDIC insured, that kind of thing. So um, I wouldn't. I really think the only advice that I could give anybody is go with somebody who is FDIC insured. So that means they're like insured by, you know, is the financial department, So that's probably the best advice is don't just go with anybody who looks good or sounds good because usually, as that old saying goes, if it sounds too good to be true, it probably is. So um, yeah, definitely if you have some more, wait until you have some more money potentially that you can use for investment, and then you can actually try it out with a reputable um, brokerage. So obviously, Webull, we just talked about that. Webull is also a brokerage that you can use. Um, so when we're talking about making your first trade, so following your trading plan, even if you don't have one, that's okay. So forming some sort of trading plan, whether it's going off of the stocks that you like or that the companies is what I mean that you like, and that might be just the plan in itself, kind of like your trading plan. Like, oh, I really like whatever Pizza Hut. So I'm gonna invest in Pizza Hut because I love the pizza and I want to support them, that kind of thing. Or I want to buy into the not necessarily, I mean support them, but buy into the company. So that could be a way to look at it. Or what you can do is you can literally just like we talked about a little bit before. So there's a strategy that I personally like. I kind of do a mix of the two, but there's a strategy I like that's called dividend investment trading. So the dividend investments is basically like all the stocks that pay. So like the companies that do really well, all some of the extra profit that they have or that they earn, they'll actually pay back. So yeah, you're welcome, no problem. So they'll actually pay it back to you. So granted, you're not going to get paid like you know 20, 30, 40, 50, $100. It's going to be more like less than a dollar up to like I don't know, maybe the most I've seen is maybe like 2.5, $3, that kind of thing, per quarter. So that's something that you really have to kind of just do your research in Google and try to figure out. Oh, thank you so much. How it happens, I really appreciate that. Thank you for that. Appreciate that support. So you really have to figure out like if you wanted to go with a dividend stock, you could literally just go into Google and type in what are the best not necessarily best, but what are the highest dividend producing stocks, that kind of thing, or what stocks pay out the highest dividends? That's something to that effect, and you can actually do it that way if that is what you just want to focus on, and just buy into stocks that pay dividends. So I'm sure a lot of the brokerages have the same sort of they call it it's a basically like a drip system. So they call it dividend reinvestment plan. So reinvestment. So drip. And basically what that does is we talked about in the beginning, but what it does is let's just say you buy we'll just use Apple, right? Everybody knows Apple. So you buy into Apple and you own the stock of Apple as a whole, right? It's like 200 and what was it? $226 or whatever. And so every quarter, so every 3 months, um, they will most likely they'll pay out a dividend because they're doing well. So and you don't have to do anything for it because you own one share of the company. So one stock is one share. Um, they'll pay you. Apple will pay you in the form of a dividend. So basically, you'll just have let's just make it up. So $2 and whatever 50 cents will show up in your brokerage account. So you can either have the dividend paid out, so it just sits in your brokerage account so you can spend it on something else. Or what you can do is you can actually have the brokerage or the app, the company, whoever the platform is, they can reinvest it for you. So if you were to get that $2.50 from Apple, what they could do is they could actually automatically take the $2.50 and buy more stock. So just like on autopilot kind of thing. So it basically, goes in a cycle like that. So have you guys, anybody ever there tried, or are you familiar with the drip system or that strategy? Does anybody do it out there? Any of you guys do it with any of your stocks? Like, do you set it up automatically to kind of like reinvest them? I do personally within Robinhood because I just I think it makes sense. I mean, if a like in my view, if a company is going to give you pay out a dividend and they're going to give you some extra money, why not reinvest it back into them for giving it to you? So basically, it's going to compound, and over time, it's going to grow and grow and grow, and then eventually, you're going to have that extra money, and eventually, it's gonna the little dollar amounts are gonna add up, and it's gonna you're gonna be able to buy more stock, and then you're gonna get more dividends because the more shares that you own, that means it's going to directly correlate to the dividends that you get. So does that kind of make sense? Is that confusing at all? I want to try to break that down so you guys understand if that's not like super clear. Just because that's like a super important strategy that I know a lot of people use and is fairly simple. I mean, it's fairly easy to understand. I think once you kind of get a sense of what the heck that means, then I think it's easy. It's easy to understand and it's easy to honestly like necessarily like take advantage of it, but um it's definitely easy to, you know, want to invest in that type of strategy because it's something to where you're basically you're getting free money, so reinvesting like free money. I mean, I don't know who the heck wouldn't want that. Like even if it's a couple dollars, I'm like, yes, that's awesome, free money, I'll take it. So that's the drip system, the drip strategy. So dividend reinvesting program. um, okay, so next up, we're going to come over to monitoring and adjusting your strategy. So why is this important? So basically, for the most part, you know, if you're a long-term investor, you can literally just buy into a stock and just forget about it and close the app and not look at it for, you know, a couple years, and just let it do its thing, right? As long as you own it, it's not going anywhere. So whether it goes up or down or left or right, doesn't really matter. So but what you want to do is if there's an opportunity or a position, if it's growing and growing and growing, and it has this sudden spike, and you don't, then you start thinking, I could capitalize on this growth, this trend up, and I might want to sell potentially. So let's say you buy a stock for like $10, and the stock is doing super stellar, and it goes up to like $150, and you own maybe 10 shares, right? So then you're like, oh yeah, I'm doing well. I mean, I'm making profit. I'm doing well with this stock. So the reason that you want to really like keep a close eye on your brokerage account or the platform, the app, that kind of thing, is you want to make sure that you know the ups and downs, right? So they call them like peaks and valleys. So you want to make sure that you're following along, but also at the same token, you want to make sure that you're aware of, okay, it did this stock do a sudden climb, and maybe you want to sell out some of your shares, you know, that kind of thing, and hold on to some. So hold on to some and sell some, so you have a little extra money to kind of reinvest into something else. So that could also be part of your trading plan, but you can't know that. You're not going to know that unless you actually keep track of it, right? So you got to check in. I think I check in like, I don't know, maybe like once a week or something, just to look at it and just kind of see what the heck's going on. And just getting a sense of where is the market going? How are my stocks overall? How are they doing? Is there something in the news that's going on that might cause, you know, a certain particular stock to like to plummet, to tank, or maybe the opposite, to like to jump up? And you know, that was a case back in, let me see when that was. The whole GameStop thing. When was that? I can't remember the year that was. GameStop, Reddit. Let's see when that was. I can't remember the year. When was that? That was okay, so 2021. So that was like January of 2021. So like I think it was late 2020, early 2021 where it just I mean, it blew up. I mean, it was over $500. I'm not exactly sure. Like, does anybody know? Do you guys know where GameStop started in terms of like, you know, before it hit that basically that um, skyrocket move that it did? Um, was it something like 15, 20, 22 bucks, 25 bucks? I can't remember exactly where it started, but I know it went above $500 for sure, which is just bonkers. I mean, that's something that I mean, that's so incredibly rare to happen to a stock in itself. Um, Not to mention some just standard old, GameStop. I mean, there's nothing really special about it. It's just the video game brand, like the brick and mortar store, where you go and you buy video games and that kind of thing and all that sort of deal. So, I mean, I'm not really sure. Like, obviously, when you kind of think back, you're like, I wish I could have capitalized on that opportunity and just bought in like really low, whatever it was. It was definitely lower than like $50, I think. And then it seemed like it would shoot up like 75 to $100, like, almost like by the day or even like by half day, where it would just skyrocket. Like, holy crap, this is insane. Though, but that was one of those things that definitely is a blue moon for sure happening. I mean, that's not something that happens all the time. So it's it's a rarity, that's for sure, in terms of coming along in in this generation type thing. So okay, so we're going to talk about monitoring and adjusting your strategy. So we talked about that, why it's important to really kind of go in, dig in, and keep tabs on what your stocks are doing. So are they going up? They going down, so to speak. So you want to track your trades, whatever you're doing, and analyze your performance. So basically, go in, see how they're doing, touch base, kind of get a sense of, are your stocks performing really well? Do you need to sell some off because they're dipping and dipping and they're going lower? Are you going to lose money in the long run if you hold on to these certain stocks? So that's just something you got to kind of think about. Um, and definitely some of it, I think to a certain extent, is common sense. So adjusting your strategy based on what works and what doesn't. So if there's something that is really taking off and really kind of shooting up, I mean, that clearly something works, something about that works. So you kind of want to capitalize on that, whatever is working. And if something's not working, or if a stock is just tumbling and it just seems like it's just not having, it's not the right time for that particular stock, then you definitely want to see if you could sell out in terms of, if you don't want to lose any more money. But I mean, you can always hold on to the stock if you want, and see if it does anything in the future. But that's probably the difficult thing, and you have to have a lot of patience in order to be able to hold and say, okay, I'm gonna hold, and I'm gonna ride this out. So, do you guys, anybody out there, what is your, does anybody a fan of doing that, like holding out, riding out, that kind of thing, and just holding on, no matter what the market does or says? Anybody out there that's kind of their strategy, like with like Dogecoin, that kind of thing. Um, so that was always something that interested me, like holding on. It doesn't matter how long, I'm in it for the long haul. That type of thing. So um, yeah, so that's definitely like something you have to kind of formulate yourself. So whatever your trading plan and your strategy is, that's kind of based on something that you would actually have to decide for yourself. So okay, so let's go into making money with stock trading. So we're gonna go into a couple different terms, and we'll kind of go over them and discuss what they mean. So you guys have probably heard the term capital gains. So does anybody know what that means? The capital gains in terms of stock trading. If you do you want to put that in the chat, down in the chat bar or the chat room? So capital gains. I'm seeing if anybody knows what that means. So let's see. Okay, give it another second here. All right, so capital gains is essentially making a profit from buying low and selling high. So basically, you're gaining when the capital goes up. Capital is, money or the stock price. So you're gaining. So profit from buying low and selling high. So, we talked about obviously like GameStop, right? So maybe that was at, lower than $50. Yeah, no, I mean, I think that Mallet, that's a good point. I mean, if you choose day trading and you're not in it for the long run, that's also a strategy. So, um, did you kind of have a question? Did it relate to capital gains? Is that kind of what the question was? Or sorry, I wasn't really clear on your question about did it have to do with capital gains? I just want to make sure I'm not gonna jump over, your question. So I think what you may be trying to say is, do you still get charged capital gains, like capital gains tax, like if you're doing day trading? And so I believe it's a profit you earn from a stock. Yep, that's right. Yep, yep. Good job, guys. Yeah, definitely. So, okay. So, Mallet, just let me know, pop in. I'm going to continue, but let me know if you have a more specific question that you want me to address. So, I'm going to keep going here. So, dividends. So, we talked about dividends, right? So, basically in a nutshell, dividend is earning regular income from dividend paying stocks, right? Earning that extra income because a company is doing well, and they pay their shareholders or stockholders a little bit of extra money because it's just a way for them to say, hey, thank you for owning our stock or being a shareholder, so we're going to give you a little extra money. So, hey gamer, how you doing? So let's try to keep this on topic with stock trading. Okay. Okay, so short selling. Does anybody know what short selling means? Do you know what that refers to? Yeah, we try to keep it cool in here. I mean, I'm super super flexible, but when you come in here and just spam, we're all trying to learn, so it's just distracting. You know what I'm saying? So, okay, so short selling. What short selling is it's a profit from a declining stock price, and it's really like an advanced strategy. So we're definitely not going to cover it like we're just going to cover like high level as far as what the definition is, and not really go into because the point of these live streams is not going into strategy like deep in. It's really just an introduction to kind of what some of these terms mean. So, okay, so next up we're going to talk about options trading. So, does anybody know what options trading is, or what that means, what that refers to? Okay, so options trading means that you use options contracts, which is another strategy for stock investing. So use options contracts to leverage your investments. Excuse me. And that's also another advanced strategy. So we definitely won't be diving into that specifically strategy wise, but we wanted to at least kind of touch on it. So yeah, so short selling is the one that we talked about before. So um, gaining a profit from declining stock prices. So basically, you're betting on the stock is going to decline, or you're betting that the stock is going to go down. So, yep. So that's short selling. Yep. And then options trading is using options contracts to leverage your investments. So those are just some of the kind of like the buzzwords, some of the keywords when you think about stocks and investments and trading. So, um, okay. So I'm gonna pause here for a sec. Do you guys have any questions? Anybody have any questions here about what's going on here? I really appreciate you guys being here. You're a part of this 30-day challenge now with us. So every day we go live for 30 days and we talk about a different topic and kind of go in, do some live examples, and talk about just like an overview and introduce people to how to make money online. So thank you guys so much for being here. I really appreciate it. So okay, so we're going to dive into the best tools to use and analyze data. So, all right, I'm going to give a shout out real quick. So, does anybody have a preferred platform that they use? because we're gonna start talking about platforms here. So I know we talked about Robinhood, obviously, because that's the one that I prefer to use. So does anybody have a preferred trading platform out there? Okay, no worries. So here's a couple of different the platforms the platforms. So E Trade, Robinhood, you have Fidelity, you have Charles Schwab, you have Webull. So those are some of the more popular platforms you can trade on. So really, it's going to depend on. Oh, okay, right on, Mallet. So your country is best for Octa FX. Okay. So does that do you do is that regular stocks including crypto as well, or is that a combination of both? Okay. Oh, regular stocks. Okay, perfect. Right on. So you have something else that you use for crypto, or if you invest in crypto? Right on. Okay, cool. Awesome. Sounds good. Okay, so we're gonna dive into charting tools. So there's a couple of different charting tools. I don't personally use these because I haven't gotten like super in depth with getting into charting and kind of taking it seriously and really looking in. Um, but hey, Hager, how you doing? Thanks so much for taking the time to comment on it. Thanks for watching. I really appreciate it. Okay, so the question is, what's the best strategy for swing trading? For swing trading, sorry. Let's, okay, so there's a couple different strategies that I have here. So I'm gonna go through. I'll go through a little bit of some of the high level for you, and just a couple different points, and then you can kind of jump in and see if you have any questions. So okay, so definitely for sure, like swing trading, like in my opinion, is definitely a strategy that focuses on capitalizing on the short, right? Short to medium term price like movements on the stock. So here's some just kind of points. So identify the right stocks. So what does that mean? So choose stocks with a high trading volume, ensuring easy entry and exit points. So that would be number one. Number two is um, how volatile the stock is, right? So look for stocks with significant price movement, which is necessary for profitable swing trading, right? So if you feel like there's a stock with like a substantial swing as far as like swinging up, that's something to kind of keep an eye out for. Um, and then next, using technical analysis. So I'm not sure if you use any kind of analysis right now, but so there's three main points to that. So chart patterns. So basically learn to identify patterns such as head and shoulders, flags, and triangles in terms of the analysis itself with what the stocks are doing. And then indicators. So you use technical indicators like moving averages or MAs, relative strength index, moving average convergent, so MACD, and Bollinger Bands. And then the next part of the analysis would be support and resistance levels. So determine the key price where the stock tends to reverse in the direction. So yeah, yeah, definitely. So let me see how I can paste this because I know that I know that the live chat it only like caps it. It caps it at like not a lot. It doesn't let me copy and paste a lot, but um I'll just let me see if I can copy and paste this. Okay. I might be able to copy and paste this. Okay. Okay, so this is the first one. And then let me see if I can figure out the second one here for you guys. Okay. Okay. Okay, so those are the first two. So, and then number 3 is going to be set entry and exit points. So let's see if this will let me. It caps me at like 100 and let's see. Okay. Yeah, you're welcome. No problem. Sorry, I wish I could post like a more bigger paragraph, but YouTube just kind of caps the amount that I can paste. But that's basically the gist of it. So here, let me show you this. Here's an example that I came up with real quick that I was able to find. Let me see um, if I can paste this here. Let's see. So this is the swing trading strategy. So I'll put this in swing trading. If I can spell strategy. I don't think I spelled strategy right, but okay. Entry sign. Okay. All right, there's 2 more parts of the strategy. I'm going to paste in here. Okay. All right, so I hope that helps you guys. I know that's not the same as, kind of going through it like obviously in person, but hopefully that gives you a little bit of an example. But that was a great question. Thank you so much for that. Definitely. Okay, so we're going to talk more about so the charting tools. So trading view, stock charts and MetaTrader. These are the tools that you can look into and you can see if these might work for you as far as like the charting tools. So if you're not, because I'm not really like that deep into it myself, this is just kind of like a high level, kind of like an overview. So I actually can't speak on any of these tools, but they just came up in my research when I was researching for this video. So, or this live stream rather. Okay, so next up is news and research. So in terms of the best tools to use and analyze, so obviously Bloomberg, Rutgers, and Yahoo Finance. Those are some of the ones that I've found to be the most helpful as far as going through getting your news. Where do you get your news, and where do you research different topics? So those are the 3 that I like to at least go to for sure. Yahoo Finance and Bloomberg. Those are 2 really big ones. So, and then if you want to analyze, like have the actual technical analysis, um, there's a couple different tools as well that you can use. And I know there's more out there, but just this is kind of what I came across. So you have Metastock, TradeStation, and NinjaTrader. Are you guys familiar with any of these? Anybody out there familiar with any of these technical analysis tools? Okay. So then we're going to move on to portfolio management. So, okay, no worries. So, portfolio management, these are basically like capital investment firms, that kind of thing. Hey, AO, how you doing? Thanks so much for popping in. I really appreciate it. So you're looking at the capital firms like the Morning Stars, those kind of to manage your entire portfolio. And that's definitely something that is for maybe more of like an intermediate, like an advanced kind of trader that has a pretty big portfolio. So, oh, that's cool. Awesome. That's great that you've heard of those. Yeah, I actually haven't dug into those before. So now I think I actually will. I'll kind of dig in and just take a look and see see what we can find with those. So um, I've heard of them before, but I haven't actually used them personally. So, okay. So we're going to dive into, there's a couple of common questions and answers that as a beginner, that a lot of people ask, right? So I just kind of compiled a list of some question and answers. So, and don't be afraid, don't be shy to ask other questions if you'd like to ask some questions. So, okay, so the first question that I get is, let me see, let me pull it up. Okay, is how much money do I need to start trading? So that's kind of a loaded answer because it's not exactly like a one size fits all, but the general consensus is really you can start with as little as 50 to $100. Um, but I think having at least 500 to $1,000 to kind of make it a little more flexible and be able to make a little bit more bigger moves, that kind of thing, is probably recommended for more flexibility. Um, but what do you guys think out there? I mean, anybody have any ideas or suggestions like how much you started with when anybody that does trading or investing? Do you have any idea roughly how much you started with? I think I did like it must have been $100. I think I started with like 100, somewhere around $100. So, okay. So the second question is, do I need any prior experience to start trading? And no, there's no prior experience needed to start trading, but it is definitely crucial. And this is really important to educate yourself before you begin. Just because you don't want to sit there and throw a ton of money at something that you're not really sure what you're doing. If you're literally just going to go in to the brokerage and, oh, nice mallet, $40. Okay, cool, that's perfect. So if you're gonna just go in and you just want to buy like one of your favorite brand stocks, then that's cool, right? Whatever the cost is of that stock, you could totally do that, right? That's totally fine. But if you want to have put together some sort of like a strategy, I think you want to be careful about just going out and just randomly spending like, whatever money, and you got to make sure that the money that you spend is something that you can afford to lose, like we talked about a little bit. Oh, okay, $1,000, nice. Yeah, yeah, hanger. Yeah, definitely. I agree for sure. If you have that much money and you're able to, I always like to think, okay, am I going to spend $500? Am I going to lose it? And will I be okay? Can I pay the bills? Can I pay for food? That kind of thing. So that's definitely something you really have to be serious about and you have to be really disciplined about at the same time. So just keep that in the back of your mind. You don't want to invest more than what you can lose. So just look out for yourself, your family, loved ones, that kind of thing. So you definitely want to make sure that you don't put yourself in a position where you can lose the money that you're supposed to pay for your living situation, that kind of thing. House rent, whatever it is. So okay. So the third question is how do I choose a good stock to trade? So when I say trade, I mean basically to buy. How do you choose a good stock to buy? So you can either do it the super easy, simple way, which what I like to do is, and this isn't even really like a strategy per se, but I like to buy the stocks of the companies that I support, that I like, that I use, you know, the ones that I like. So that's one strategy. Or you can use a combination of both technical and fundamental analysis to identify, maybe some promising stocks, that kind of thing. So, and of course, you need to have money. So it really depends on how much money you have too. So you got to make sure that you have enough money in order to buy whatever the stock is that you want. So, and again, remember, you can always buy the fractional shares, right? That's always something that you can do. You don't, if you don't have enough money to buy like the full amount of the share itself, you can always buy a fractional share. So I wouldn't worry about that. Don't think that, you're getting any less of an investment because you can't afford to buy the full share like right in this moment. Um, definitely, if you can only buy a fraction, for sure, buy a fraction, and that way you're at least investing into something, right? Into a sliver. So, um, okay. So number four is, what is the difference between trading and investing? So I'm gonna let you guys kind of see. Does anybody have any ideas? What do you guys think? What is the difference between trading versus investing? Yeah, Mallet, that's pretty right on. So Mallet said, "Isn't trading based on emotions rather than critical analysis kind of risky?" Yeah, investing is for long term. Yeah, you guys are both right. I think you both hit the nail right on the head. So, um, and this the answer I'm going to give is not like the end all to be all, but it's an answer. So trading involves frequent buying or selling for short term gains, and I think that's where the difference is right there. Um, yep. While investing focuses on long term growth. Yep. Hey Jennifer, how you doing? Thank you so much for joining. Thank you for popping in. It's so great to see you. Yeah, so yeah, that's a good point, Jennifer. So in a nutshell, it could be definitely based on that as far as time frame. So um trading is more frequently buying and selling for like the short term. And then investing is definitely focused on more long term. So long term gain or growth, long gain or growth, same kind of thing. So okay, so number five is, how do I manage risk in stock trading? And this is something that I think no matter how much experience that people have, this is always something that's on the forefront of everybody's mind. I know for me too. And just like, dang, I worked so hard for this money and I'm gonna invest it. How do I mean, I'm gonna put it like this. I don't think there's any 100% foolproof way to not, I think, be around some sort of risk. The only way to ensure that 100% honestly is to not invest. So, I mean, there's going to be risk with everything you do. The stock market is no different. Um, so, here's a couple of different things that just to kind of think about. So, diversifying your portfolio. So, what does that mean? So, basically, you don't want to put all of your money into one stock, regardless of what some of the experts, analysis and analysts say. So try to diversify your portfolio with, mixing it up between, fractional shares with ETFs with, you know, maybe stocks, and then put some bonds in there too. And just, and not all in the same industry too. Maybe have a little bit of tech, a little bit of maybe gas and oil or power, a little bit of maybe food or like a restaurant, that kind of thing, or like brands, like food brands. So really try to diversify as best you can. Um, I think the safest way to go for sure is probably, if you're not sure about an individual stock, and you're like, well, I don't know if it's going to go up or down, that kind of thing. Then an ETF is probably more safe, in my opinion, just in my opinion, because it's a buffet of stocks, so to speak. I mean, it's earlier we talked about being gumbo, and I'm partial to New Orleans, and so I think about that food all the time, and that's why I use that analogy. But that's kind of the thought of it. So and then this next kind of thing is common sense. So never invest more than you can afford to lose, and I think that's something that is a lot easier said than done, because I think there's like an allure, there's a draw, and there's like, um, I don't know, it's like the glitz and the glamour and the shiny stuff, and you're like, oh, I can make a ton of money and become rich overnight. And while a part of investing and stock investing and doing shorts and that kind of thing and different strategies, that might be true, but that's definitely not for the beginner. So this particular live stream is definitely focused more around like the beginner, the extreme beginner, if not somebody who has no idea what they're doing. So we're definitely not going to get into those advanced strategies. It's just like a simple hello, kind of introduction to investing and stock trading. So really just something to kind of think about, like, hey, maybe I could get into stock trading as, a side hustle, or, something that I could use as a business model to make money. So yeah, Mallet, you're right. Absolutely. For sure. It's basically like the greed factor, and greed factor can definitely bankrupt people. It can make you lose all your money. It can just do these horrible, horrible things. And I know people, I've actually known people personally, like, that have gotten blinded by this, just the shininess of like the dollar and earning more money and more, that kind of thing. So um so um younger, I would say, so the question is, what would you suggest for a beginner, swing trading versus day trading? So I would probably say day trading for sure. Um, so let me get my notes here. Okay. So I would definitely say day trading. Um, and I think because it definitely like lowers the risk. So you definitely want to have, some sort of, because if you go to like day to day, as far as that kind of goes, um, I think it allows you kind of keep your emotions in check and not be fully engaged. Um, so I think, you can just a simple like trading kind of plan might be like, okay, selecting the stock, choose a stock from your watch list or wherever. Um, you know, maybe enter the trade. So like you want to buy a stock at whatever point you're comfortable with, as far as like, the amount itself for the stock. And you definitely want to monitor it. So um, maybe before you buy in, kind of monitor to see if there's any trends in terms of like it going up or down, and that kind of thing. And then just in terms of going through and having that be a long-term strategy, I think you can pivot and switch. But either the day trading or buying something and holding on to it long term. So if somebody is not comfortable with or not familiar really with day trading or swing trading, then I definitely would say, don't choose either one of them. Just buy a stock and hold on to it, and just hold on to it for the foreseeable future, and just kind of let the market do whatever it's going to do. And I think that's important, because not only is it teaching you basically about the stock market, even if you're not buying and selling, that kind of thing, every day watching the market, because I feel like that's more of like an advanced strategy. But for somebody who's really brand new, I would just keep it simple, very simple. Go and choose whatever brokerage you want, and then buy a stock, buy an individual stock, and then that's it. Watch it, hold it, see what it does, kind of get familiar with like the indicators. Look at the different information that it gives you, as far as does it does it produce a dividend, or do they pay out a dividend? Um, and just kind of watch it and just kind of see. So I think that's probably the easiest thing to do, as far as for somebody who is an absolute beginner. So but that was a good question. So okay, so number 6 is, can I make a living from stock trading? And I think anything's possible, right? I mean, this is definitely like one of those kind of loaded questions, in terms of, it's almost like, how long is a piece of string, right? It's one of those things where you can't really answer it like fully. It's going to depend on the person, the amount of money they have, how much they're willing to invest, how much they're willing to potentially risk. So it is possible. I mean, it definitely requires like like a lot of experience and skill and discipline, maybe above all else, discipline. So just to make sure that you're not guiding, emotion is not a part of what you're doing as far as like buying and selling. So that's just kind of like a short and sweet kind of answer to that. So, okay. So number seven is, what is a stop loss order? Do you guys know, anybody out there, do you guys know what a stop loss order is? And it's kind of used as like a strategy, or like almost like in a sense like a fail safe point, just as kind of like to kind of guard yourself from I think losing too much money. So okay, so a stop loss order, yep, yeah, Mallet, that's exactly right. So a stop loss order automatically sells the stock when it reaches a certain price. So you basically want to limit your potential losses. So in a nutshell, it's basically safeguarding you from losing like a ton of money. So, yep, exactly. So, I think that's incredibly significant and important for somebody, especially a beginner, to be aware of some of these different, um, kind of like features or just things that you can implement in order to safeguard your money. And I think it's incredibly responsible to learn about these different techniques, tech, sorry, tactics and techniques, so you can hold on to as much money as you possibly can. Unless, of course, you have, let's say, $100 and you're just willing to lose a whole $100 and you just want to like kind of go, high risk and just do whatever you want. But when it comes to like large sums of money or large investments, you definitely want to make sure that you're safeguarding the most amount of money you possibly can, because you don't want to just lose all your money, right? So, um, has anybody done that? Like anybody here in in the live stream chat, like, have you guys done that? Anybody done a stop loss order? Like, have you ever set that up or enacted it? Um, activated? Sorry. So, Mallet, how did you determine, as far as like, I use a lot. Okay. So, how do you determine, you know, when to sell? Like, as far as like the stock goes. So, how do you determine that certain point that you're like, oh crap, I need to sell it at this whatever the number is? Like, how do you determine that number? Like, just you personally, like, what is your strategy to kind of, where do you activate that stop loss order? So, do you do it on every stock that you buy, or is it just certain ones? I just think it's incredibly safe, or safe. It's safe, but I think it's incredibly smart. It's an incredibly smart move. So, okay, so we're gonna kind of move on. I'll circle back around. All right, so number 8 is, how often should I trade? So as a beginner, how often should I trade? So really, the frequency is going to depend on a couple things. So it's going to depend on your trading strategy. So we talked about that. What is your trading strategy for your investments? Um, okay, so I'm going to pause for a second. Okay, so Mallet said, I do it on all stocks because I tend to be busy sometimes and can't remember. Okay, cool. No, that's awesome. So um, that's kind of like your safeguard, right? That's kind of like your security blanket, in a sense of like, okay, I'm gonna I'm gonna activate it, and I'm gonna make sure I don't lose too much money, basically. Right on. So you do it on all stocks. That's perfect. That's cool. I mean, this information or this tip is definitely gonna help a lot of people out there who are either watching this live or they're gonna watch a replay. So thanks for offering that information. I really appreciate that. So okay, so let's get back to how often should you trade. And the frequency really depends on what your trading strategy is. So we talked about that before in the past. Um, So day traders, for example, they're going to trade daily, obviously, while swing traders, they hold the positions for a couple days or weeks. And then another variation of that is if you're a long-term investment, um, maybe you don't trade like ever. You just buy it and you hold it, and that's that. So I mean, that's definitely a strategy in terms of, you know, basically, buying and holding and just kind of let the chips fall where they may. The stock goes up, the stock goes down, and all around left and right. But I think that's probably one of the safest, in my opinion, one of the safest strategies to look at is just to buy it and then just kind of hold it while you're learning, like kind of in the background. So if you're able to learn and kind of maybe be a little more risky and a little more strategic with how you're going to approach maybe buying some stocks or investments in the future, that's also, something you can easily kind of pivot. But maybe you want to have like your core group of stocks or your investments and just have them and you're good. You're not going to mess with them. You're going to buy them once, let them sit and let them kind of ride off into the sunset and just hold on to them, that kind of thing. So that's actually what I do. So I don't really trade that often. It's mostly just buying it and holding it for the long term until I can kind of get in and learn a little bit more, educate myself, and maybe learn a little bit more of like advanced strategies. But I just, it all comes back to money, right? How much money do you have that you can actually put towards this? So that's kind of like the biggest thing. So this definitely could be a legitimate side hustle for sure for anybody, right? Even if you're just buying a stock for the dividend, and that in itself is essentially passive income. The dividend, the money from the dividend is passive income because you're buying into the stock for whatever the price is, and then the company is doing well, so they pay you that money, even if it's a couple dollars or less, and you don't have to do anything for that money. So that's pretty dang cool, if you ask me. I just love the idea of being able to hold on to something. You buy it once, or you buy, as the price goes down a little bit, you buy a little bit more of a stock that you like, and then the company pays you. I mean, how cool is that? That's super cool in my mind. So, and it doesn't mean that you have to spend tens of thousands, if not, hundreds of thousands or millions of dollars. I mean, you can start with $100, $200, $50, um, and just go through and buy like the fractional shares that we talked about, like in the beginning. And you can do it that way, and you can still be an investor. You don't have to, if you don't have enough money for the full amount for the share, that's okay. Just save up until you can buy the full share for whatever it is. And then, so just keep in mind, if you don't own the full share of the stock, you're not going to get the dividend. So you have to own the full, like wholesale, price of the stock. So what do we look at? So Apple was like $226 for one share. So you have to buy that full thing in order to get the dividend off that. So hey Jordan, how you doing? You know what? I got to be honest. I'm not sure what that means. Is Transocean rig stock going to be delisted? I'm actually not sure. I'm not familiar with that one. Anybody else familiar with that? I'm not sure exactly what that is. Sorry about that. Okay, so let's move on to question number 9. So, what are the tax implications of stock trading? So, I'm going to give a disclaimer here. Obviously, I'm not a tax professional, I'm not a CPA. I don't know anything about like the tax law, that kind of thing. So, I'm not a lawyer. So, this is purely information that was gathered online. So, don't take this, don't use this, as 100% concrete in answer. So, the profits from trading are subject to capital gains tax. And you definitely want to consult with a tax advisor for more details on what that means if you were to owe taxes, that sort of thing, wherever you are in the world. So definitely be aware of when you're buying and you're selling. Anytime that you make a profit, most likely there's going to be some sort of capital gains tax. So just keep that in the back of your mind. Don't let that scare you from buying and selling, but it's just something to kind of keep in your mind and, you know, just have in the back of your mind so you're aware, right? So, okay, so number 10 is how do I stay updated on market trends? So, what do you guys think is the best way to stay updated on market trends in terms of like the stock market and that kind of thing? So, anybody have any ideas? Yeah. Yep. That's a great one. That's a great one, Jahangir. So that's the first one that I was about to say. So good job. So follow financial news, whatever that means to you personally, individually, um, you know, wherever you are in the world, that could look different for different people. Um, so also you could subscribe to newsletters that have a financial investing type theme. You can join different trading communities. I know there's groups like on LinkedIn that you can join. Of course, Facebook. I mean, obviously, with anything that you join or anything that you're getting advice from or getting insight, just try to be smart about it. Don't take what people say as 100% like that's the truth, and you know that's what it is, because you want to protect yourself from getting scammed. You don't want to have somebody take advantage of you, and you definitely don't want to give out any of your personal information to anybody online for sure. Do all of your, the questions that you have, make sure that you're talking to people you can trust that are reputable. But at the same time, it doesn't mean you can't get advice from people, right? And you can't get somebody's opinion. I mean, that's all good, right? It helps to kind of learn different opinions and different perspectives on things, whether or not you watch maybe like investment YouTubers, that kind of thing. You go to different websites, but it's always good to gain more of a perspective. But at the same time, just be careful about what you do with that information, or how you use it, or what you decide to do next, because you just want to make sure that you protect yourself. Not only that, but you protect your money, you protect your privacy, and all of that. So okay, so number 11 is going to be, what are the common mistakes to avoid in stock trading? The number one thing that I found that people are just saying over and over and over again is avoid emotional trading. So what does that mean? So basically, you don't want to just base your buying or your selling or whatever you're doing, whatever strategy you're using, you don't want to just do it based on emotion alone. So how you feel, how you think you should do it. If you're really like ramped up and you're super excited about something, or you're like, I don't know, you kind of have doubts, that kind of thing. You definitely want to take a step back and take a breath and be like, all right, I need to really analyze the decision I'm about to make before I potentially either lose money or miss out on a chance to earn a lot of money, because I didn't act fast enough, because I was too scared or too timid, or I wasn't sure what was going to happen. So definitely avoid emotional trading as best as humanly possible, because that definitely spells disaster, I think, just overall. So the next one is over trading. So you definitely don't want to just jump in and just trade all day, every day, especially if you're coming at this from like the perspective of being a beginner. Because if you don't fully know what you're doing, or you don't fully know the consequences of what you're trading or how you're trading, that type of thing, um, that could really spell disaster for you in terms of, not only losing money, but also losing opportunities, and just all around kind of being in, a more kind of negative space. So um, lack of research, that's another big one too. So if you don't research, if you don't know exactly what you're getting into, what you're buying, how to do it, how it works, that kind of thing, these different strategies, that could also cost you a lot of money or potentially cause you to go bankrupt. So you definitely want to be very, very cautious and like conscientious about the decisions you're making. And they have like real legitimate like data and financial like analysis backing. You don't want to just make it on a whim, that kind of thing. Unless of course you're doing in a situation where you have some kind of money, that more liquid money that you can kind of play with in order to learn. But I know a lot of people are not in that position. So um, just be smart about it and do your research, figure out what the stock, everything about the stock you can find out, and don't go around buying and selling and taking risks unless you're willing to accept whatever the consequence is. So, yep. Yeah, definitely. And the final one is not using stop loss orders. That's a big one. We talked about that a little bit earlier, and that is a big one to avoid having a really catastrophic loss for yourself, for your finances, maybe for your, financial future, that kind of thing. So you really want to make sure that you take advantage of all the safeguards that the brokerage or the platform they have to offer. Because if you don't, you could make some moves or do something that you potentially regret and you can't get that money back. So all right, so before we go any further, I just want to take a moment to say thank you guys so much for being here, for joining, for subscribing, for the new subscribers, for the people that are already subscribed. Thank you so much for your support. I really appreciate it. Our channel is actually not monetized as yet. We're working towards that goal. But if you would like to support our channel, at the very top of the live stream chat, there is a comment, a pinned comment for supporting our channel. There's Buy Me a Coffee, Cash App, PayPal, Venmo, Zelle, and so forth. So if you feel inclined to donate something to us, we'd greatly appreciate it, and it would definitely help out the channel, and we appreciate that. So thank you so much. So okay, so let's move on to question number 12. And question 12 is, how do I track my trading performance? So does anybody have any ideas, any suggestions on the best way to track your performance? Or is there anything, any strategies or any tools that you guys use out here that would be helpful to other people in the community to share? Okay, so some of the suggestions might be using a trading journal or portfolio management tool, depending on how deep or how big of like an asset kind of portfolio you have. You could theoretically go to like a portfolio management company, somebody that you can actually, like a wealth management company that you can actually hire to kind of help oversee your entire portfolio and really kind of give you the best insight and the best direction on what to do with your stocks. How are your investments running, moving? Should you kind of hold or pause? Should you be more aggressive in certain areas? And they really will help you like review and analyze not just your trades, but like your strategy as a whole. So that might be an option. Some places, the bigger brokerages that are out there, definitely sometimes they have these. You can't get into the portfolio management space unless you have a certain dollar amount. So typically that's a couple $100,000 that I've seen. If you really want to work with a broker, like work with somebody one on one, that sort of thing. But really you're going to have to do your research and kind of figure out whatever the brokerage is, see what is their threshold for being able to actually work with somebody to kind of work hand in hand, a broker hand in hand. So that might be an option if you have more money that you are able to work with. But as far as somebody just getting involved in trading and investing and that kind of thing, then I wouldn't worry about that. I would just log into the app or the platform as much as you can just to kind of watch and kind of see how it goes, see how the stocks move and they kind of shift around, and see if you can notice any trends. And if nothing else, you can't go wrong with buying your favorite companies. So that's something that I do personally. I actually still do that. And that's why I mentioned Apple. So buying Apple, they pay dividends. So I know Coca-Cola is another one that pays dividends. So really, you could kind of use that's a really solid beginner friendly strategy. Okay, so we got about give or take 10 minutes left on this live. So I'm gonna go through a couple more questions. I wanna pause for a second, see if you guys, did anybody have any questions? Anybody have any other questions that we didn't really cover or you wanna see if we can get answered? Okay, no worries. So if something comes up, you can always put it in the chat. Okay, so question number 13. So what is leverage and should I use it? So basically, leverage allows you to trade with borrowed funds or money. So it can amplify gains, but also it can increase the risk because if you're borrowing money, then you got to pay it back, right? So it also increases the risk. So that's definitely something I think that is more of like an intermediate to like a more advanced. So thank you so much, Sweetums. I really appreciate it. Okay, so Mallet says, when you do start your lives and when do you start your lives and how long is it? So I got to be honest, I apologize. Today's live was a little, it was not at the typical time that we do lives. Um, there's some personal things that I got going on a little bit later. And so I had to start the live a little bit earlier. So I apologize for that because I know it's not the typical time. But usually what I'll do is I'll start the live between 4 p.m. and 7 p.m. Mountain Time in the United States, typically. And usually they run about, I try to get it to at least 2 hours. So 2 hours minimum, if I can absolutely help it. But sometimes they can run up to 3 hours, but 3 hours is not really typical. So it's really between 2 and 2.5 hours, I would say. So, but all the lives they do, the replays of the lives, they're all online and they're all accessible. So we made a playlist of all the lives so far in this challenge, and we're in day 25. So we have the previous, 24 days of lives in a playlist. So if you guys would like to do that, we can get you the link for the playlist if you'd like to check that out. So that's a good question. So, okay, I got two more questions for you guys, and then and then we can take one more final round of questions. So, um, question number 14: can I trade stocks on on my mobile device? So yes, definitely most trading platforms offer mobile apps for trading. Um, and this is a great way to learn on the go. So if you're somebody who's kind of moving around all over, or if you have a job or a career or whatever it is, thank you, Sweetums. I really appreciate it. If you have a job or a career that involves you to be constantly moving or traveling or doing that kind of thing, you can definitely do investing and you can do stock trading, buying, selling stocks on your phone for sure. So it's really going to depend on the individual platform or the brokerage, but something like a Robinhood, I talk about that a lot. You can absolutely use that and you can use that to your advantage because you can do mobile trades or mobile investing, buying and selling. So that's definitely one of the tools that you can have at your disposal just right in the palm of your hand. So, as well as a lot of other ones. So, okay. So, question number 15 is, how do I choose a reliable broker? So, what is a broker? First off, so what does a broker mean? So, a broker is basically an individual. It's a person that would help kind of guide you on your strategy for your investments. So, basically, they would kind of oversee your portfolio or your investments like as a whole, and they would say, well, maybe you want to try to buy into this stock or maybe sell that if that one's not doing as well, or maybe potentially think about buying like an ETF, that kind of thing, that has multiple stocks that is built into one, or just kind of give you general advice as far as maybe which way to go. So in terms of how the market's doing, maybe what's trending, that kind of thing, and really kind of dig in and see how you could take advantage of, leveraging your investments i- in a, basically to increase your profit. So, I mean, obviously, there's some brokerages that if you work with a broker, you can either work with somebody who doesn't take commission. They basically, when you do well, when your stocks are growing and your portfolio is growing, um, that person would get paid. That's one solid brokerage that I've seen. Being a broker, I mean. Um, but what you could do is you definitely want to look for brokers with good reviews first and foremost, somebody you can trust. And even if you have to ask around like friends, family, coworkers, that kind of thing, people that you can trust and say, okay, this person did really good things, within their power to help my investments, that kind of thing. You want to look for low fees. So you definitely want to know what is going on in the back end. How much am I going to be paying, or am I going to be charged in order to kind of manage or, keep my portfolio as best, in tip top shape as possible. So, um, and then of course, a robust platform. So something that you can take on the go, like an app, that kind of thing. But also at the same time, you want a lot of features, a lot of even like I would say look for features, look for ease of use, like how easy is a platform to use. Also, do they offer any in-app training? So anything that teaches you how to invest, and maybe what to look for, that kind of thing. In terms of if you're a beginner, maybe give you some education or some documentation that you can kind of go through on your own, and that way you can feel a little more confident and more comfortable with what you're doing, especially if you're just getting started and you're not really sure what to do. um, and finally, you definitely want to have like excellent or stellar customer service. And the reason that's important is because if you have any questions when it comes to like the money side of things, the most important thing, right? Your money. Um, if there's problems with withdrawing or actually depositing or your bank account, that kind of thing, you want to make sure the customer service individuals with that platform or that brokerage are on top of it. So, because in the end, it's your money, you're going to choose what to do, how to spend it, that kind of thing. But at the same time, you need to make sure that you can trust this platform and the people that are behind it. So they have that your best interest basically at heart. So okay, so we're gonna kind of do a super quick recap. It's not gonna take very long. So um, basically, we talked about investing. So stock trading, if you're a beginner, the best strategy that I personally would recommend is just go into any brokerage that you would like, anyone that you think is easy to kind of navigate, and buy stocks of brands or companies that you love. So we talked about just ones off the top of my head that I can think of: Apple, Coca Cola, Microsoft, any kind of car brand, Ford, whatever it is, doesn't matter what it is, whatever you like, whatever brands that you feel good about as far as like not just supporting but buying into the company. Um, so then again, if you don't have enough money to buy the full stock itself, the full stock price. So once again, we talked about Apple. So for one share of Apple is $226. If you don't have that lump sum, that amount of money to buy the full share, you can always buy fractional shares. So it's basically buying like a sliver of pizza or pie. You're buying a small piece of that share still. The only downside to fractional shares is you don't get to take advantage of the dividend if that's a dividend stock, because you need to have the whole share as a whole itself. But that shouldn't discourage anybody from not investing, because owning a fractional share of some company, whatever it is still better than not owning anything at all. So those are the two biggest pieces of advice that I would give. And of course, definitely do not spend or don't invest more than you can afford to lose. That's probably the number one above anything else. It doesn't matter what stocks you go with, what brokerage you choose, what platform. Don't You got to be really careful and really conscious. Don't spend more than you can afford to lose, because the risk is extremely real, and it's something that you could lose your life savings. You could go bankrupt. You could just destroy everything that you've worked hard for. So keep that in mind. Have your discipline and make sure that you're yeah, you're welcome, Alan. No problem. So thank you so much for being here. I really appreciate it. So yeah, I hope you guys enjoyed today. So today was day 25 stock trading. So tomorrow we're going to be talking about creating a SaaS business. So selling software as a service. So if you're familiar with that, or if you're not, you definitely want to come and hang out. All you got to do is make sure that you're subscribed to the channel, and just hit that notification bell, and you'll know when we go live. And we're definitely going to go live at a more decent time tomorrow. And yeah, you're welcome. So thank you guys for being here. I really appreciate it. So hope you guys got something out of it. And have a great night, everybody. Great night, great day, great afternoon, wherever you are in the world. Be safe out there, and I really, really hope that we'll see you guys again. And definitely be safe. We'll see you next time. All right, see you guys.